Hey everybody, it's Ed. The future is now, and the future is thanks to you guys. All right, we just hit 1,000 subscribers. I know it's probably no big deal to most people, but I appreciate you guys and your comments. And I mean, 95, 97% of all your comments are always, positive, constructive. They're actually helpful to me in a lot of my decision making and mindsets. But I just want to give you guys, everybody, a shout out, and I do appreciate it. And you can always share the channel or share a video with anybody that you know who wants to get involved in investing and learn some of the basics for strategy purposes, to learn how to manage risk and still make good money over time. So the main focus of the video today is about the most important thing you can do in investing. Okay, and Warren Buffett said it, and millions of other investors have talked about this. But anyway, before that, I just want to sum up. The day was monstrous. Tesla, SPCE, and Google were all up for us today, so it was another monstrous day for us in the portfolio. When I was 16 years old, my father taught me the most valuable thing in investing. It's a concept called the best in breed. If you are picking the best in breed in stocks, you will rarely falter. Okay? So, and this basic spreadsheet that I put up today, and it basically took me a few minutes to put it up, but I wanted to kind of give you guys an idea of how important the best in breed really is. So my father threw 3,000 at me when I was like 16 years old. And he said, track these stocks. Okay, actually they were mutual funds at the time. Fidelity Select mutual funds. This is back in the late 80s when I actually had to get graph paper and track the net asset value on a daily basis and then track the moving average that worked against that. I literally had to jot it down and make the charts by hand. Now it's like super simple to invest. So I have to give basically all the credit to my father. Okay, he died in 2011, but he left a legacy to me, not just money, but the knowledge. That was way more of a factor. Okay, the knowledge of how to invest properly, how to pick the best in breed, how to catch it, how to see things kind of before they happen. You want to Jedi Knight everything. You want to see things before they happen years and years later. And I don't mean like predict like, oh, this stock price is going to be at that and that stock price is going to be at that. That's not what I'm saying. What I'm saying is think about what microchip company is going to be the best company in 3 or 4 or 5 years? What retail company is going to be the best in 3 or 4 or 5 years? What streaming service company is going to be the best in 3 or 4 or 5 years? Do you see what I'm getting at? You're trying to look ahead properly and see which company is going to win. So bet on the winner. Bet on the horse that wins the race. Not on just random horses because they're all in the race. Now if we start on the top left hand of the spreadsheet, you can see Google. Okay, what did they win? They won best in search. Okay, I wasn't betting on Yahoo. I was actually shorting Yahoo for a time. Okay, Apple, what are they the best in breed in? The best mobile phone producer in the world. They have the most market share. Okay, they're the best. Look at their market cap. Okay, Facebook. At the time and through a long time, they've been the best social media at the time, okay? Now, Tesla, the best electric car company, potentially going to be the best car company in the future. And lastly, Virgin Galactic. That's not a best in breed. That's like a first to the market. So my father bought Google in 2004 because he knew they were going to be the best in search. He used the company years before they even went IPO. So he bought it for $100 a share. Think about it. 100. That's crazy. Okay? Apple. I was trading it at 165. That was more of a trade, but in that that popped to about 197.202 before the market turned in 2008. Facebook, 2012, IPO. My mom calls me up. Hey, should I invest? Definitely. $33 a share. And it went up to 217. You know, price sold out at 203. Okay, Tesla, 2019. I was hammering research on this company well before we even invested a nickel in this company. I was like, oh my gosh, they have such a lead on everybody. I'm like, this company is about to break. And sure enough, it broke the trend on the charts and we gobbled it up right at that time. Virgin Galactic, for the last one, basically, we got it in at 9. We got it when that broke because there's tons of potential there. And we actually sold out in at $31 a share. So if you look at the gains percentage-wise, 1320, 19%, 515%, 279%, 238%. Okay, that's track record there. I mean, these are actual track records of buying and selling, and a lot of these are still in hold position with room to run. Tesla, honestly, I expect to get to 2, 3, 4,000 a share. That doesn't surprise me at all. I mean, when it goes up 60 today or whatever, 40, 50, 60, it doesn't matter to me now because I can see it going up to 2 and 3,000. That's when I'll start getting impressed. Okay, I'm not impressed at 1,000. I'm not even impressed at 2,000. Because this is the beginning of the company. In 10 years from now, if this company isn't at 3 or 4,000, I'm going to be disappointed. I'm going to be like, wow, they definitely just did not achieve as much as I thought they would. So I apologize if I come across like kind of screaming at you or yelling at you. I am just super passionate. I'm passionate about everything I do in life, period. And this is definitely no exception. Okay, but this is the most crucial thing. People are always asked, oh, what do you think of this one and that one? And I'm like, oh my God, these stocks are dogs. I mean, they're dogs sometimes. Some of them are really good. And I'm like, wow, I'm putting that on my list. But a lot of them are like kind of dogs. And I'm like, why aren't people looking at the best in breeds? I mean, invest in these stocks that are going to dominate for years, not super speculative stocks all the time. I mean, Virgin Galactic to me is super speculative, but I can see them changing and disrupting the entire airline industry. So that could be big long term, potentially. If they are point-to-point travel, that company can be huge at some point. I mean, 100 or 200 a share, I could see that, no problem. So on the left side, column A, I put down some Dow stocks that I like and some NASDAQ stocks that I like. Okay, I look at Apple again, best in breed. Microsoft for computer and cloud service, best in breed, or one of the best in breeds. Disney, another best in breed. Nike, I mean, you could say Under Armour and Adidas or something like that. Who's the best in breed? I mean, I like Nike personally. Visa, I mean, MasterCard and Visa, who are you going to pick? I mean, best in breed is critical. I mean, NASDAQ stocks, same thing. AMD, NVIDIA, Netflix, Amazon, and Intel, these are the companies I like in the NASDAQs that I don't already have. Like, obviously, I like Tesla, but because I think chips are the future. Okay, Netflix is the best in breed in streaming services. Amazon is by far the best in breed. They have 50% of the market share. Okay. Well, people say, well, why aren't you investing in Apple or Disney or whatever? Well, I mean, there's a lot of reasons, and the main reasons I listed is kind of, well, Apple, it's already kind of had its heyday. I'm not saying it's not still dominant. It's just I don't like investing in super huge market cap companies because, I don't know, I guess they're not too exciting to invest in for me. I like investing more in innovation. So it's more of a personal preference there. You know, with Disney, I would have invested in Disney, but I actually missed the Disney Plus breakout. So I was like, okay, well, I already missed the breakout. I don't like buying in the middle or towards tops of peaks. Okay, I like buying when things break out because there's less risk at that point. And Nike and Visa, I really don't have any reasons behind that. Now, if it comes to the chip companies and NASDAQ, They're just too boring to track. I have to track, I have to research, I have to know everything inside and out about these companies if I'm going to invest in them long term. So, I mean, for AMD, for example, I don't really, I mean, it's been around for a long time. I don't really want to, think about the CEO, what they're doing, what they've got in the pipeline, and do a ton of research on the company. I mean, if I worked for the company, yeah, I would definitely, have some stock or whatever. And if I knew more about it, but it doesn't really interest me personally. So, I mean, I would stay away personally if I'm not interested in the company, if it's not exciting. I mean, to me, Virgin Galactic is super exciting. It's going to be crazy this year. Tesla's always got excitement. There's excitement around Elon Musk and about a lot of things that they're doing. So that's always exciting. I mean, Facebook, you could say there's some craziness sometimes with Zuckerberg, Apple, and when Steve Jobs was around, Google and the Google boys. I mean, come on. I mean, there was a lot of excitement around those companies, maybe not so much anymore, but still, you've got some excitement around it. It makes it fun to follow. Don't follow a stock that you're going to be bored with in a couple days. Now, the next two companies that I am considering that actually aren't on this chart are DDD, which is a 3D printing company. To me, I'm going to have to research a lot about it to find out who is the best in breed with 3D manufacturing. Okay, that's key to me. I'm going to have to do some research if I want to invest in a 3D printing company. So that's one that I was considering because I think there's a lot of future in that market. And the other company, let me think here, I'm getting a little stuck. Oh yeah, it's a small company. I think it's going IPO and it's called something like Starlink or something. I don't know if you guys ever heard of SpaceX. I don't know. SpaceX is, this company. It's private, but, Starlink. Yeah, it's something you may want to look into. Granted, 1 billion people are going to be running for shares on Starlink IPO. I can't even imagine how wild that's going to be. You can see an IPO go from potentially, let's say, 20 or 30 a share up to 50 or 70 a share in the first 2 or 3 days of trading. That's my, wild out prediction. That could happen with something like Starlink. So now in the upper right-hand corner, J, okay, you can see why out. Okay, like why would we get out? Okay, well, Google still in. Okay, Apple, that was a trade. I was day trading at the time, so that wasn't more of a long-term investment at the time. And the market crashed. I saw it coming, and I basically capped out the gains and was like, okay, I'll wait until it kind of comes down to earth. And what happened was I just ended up starting my own company, and I got so wrapped up in that I just didn't go back to day trading. So, and then Facebook, let's see. I think the main reason to get out on that, not just because the stock is, kind of flustered a little bit, but more it's because I see more advantage in Tesla and space right now. So I want to take advantage of things that are taking off instead of kind of things that could potentially be going sideways. Okay, if that makes sense. In Virgin Galactic, right now, we're just in a situation. We posted the gains. We already made some bank on that. And so we basically want to buy in at a cheaper valuation. I mean, I would like to get somewhere between, it's really a tough call for me, somewhere between 200 and 1,000 shares, but I'm not sure. I've got to really follow the charts and track this one closely and see. I don't mind even if I have to buy higher, but I am going to buy on the upward trend. It's still, it's still going so vertical right now that it's kind of a dangerous stock to play, and I want to get in the cheapest possible valuation. But even if we have to buy higher, I'm fine with that. Not a problem. Like I said, I don't FOMO myself to death on things. Okay, so to retrace back to the middle of the chart, if you go down to F on accounts managed, there's the separate account totals, and you can see that I'm basically managing about 240,000 in overall accounts. There's a lot of ETFs as well, and a lot of other, retirement accounts and whatnot. But as far as the pick the winners, you can see Google, Apple, Facebook, Tesla, and Virgin Galactic. And you can see you don't have to invest a ton to begin investing. Look at the investment initial investments, and you can see these are not heavy investments. I started investing $1,000 in Virgin Galactic, for example, and we booked $12,000 in profit. Okay, this wasn't options trading. This was just adding to the position as our risk depleted. And then we got to the point where we basically had no risk. We were up like 11,000, so there was like zero risk. So I tried to book the money there. And then, see Tesla. I mean, we're in basically a total no risk zone with Tesla. What's the odds that Tesla is going to fall to 150 tomorrow? Zero. So Facebook, we ducked out and, banked the gains there. And, Apple was the trade there. And Google we still have, so that's great. So basically you can see that with an investment of basically $16,000 to start all of these investments, we've capitalized on $160,000 in gains. You don't have to invest a lot. A lot of my subscribers talk about it all the time, and they're investing like, they kind of joke about it. Oh, I only have 5 shares or this and that. It doesn't matter. I don't care if you're paper trading. Any shares that you're investing, you have to take seriously and just do your best. All you're trying to do is do the best. It doesn't matter how much money. It really matters the percentages that you book consistently, and then you'll add up and you'll collect more and more money over time. So if you're just out of a stock trying to wait, I'm going to wait until this stock gets down to $12 or whatever before I get it. If you just sit on the sidelines constantly, you are never going to make any money. Okay? You have to nibble in. Get in. It doesn't matter if it's $50 or $100. Find the stock that you want to track, a stock that's best in breed in whatever sector that it is, and track it and follow it. And then if you're feeling confident, okay, I'm up X amount of dollars, and then you want to invest a little bit more, then invest a little bit more. That's kind of how, it's like good begets good. You want to keep adding to, in my opinion, you want to add when you get more and more confidence, when you get more and more risk stabilized in your account. So obviously my legal disclosure is I don't tell anybody to buy or sell any specific stocks. Okay? I'm not here to recommend you to buy or sell a specific stock. I don't mind tracking it or looking at it and saying what I think on the technicals. I have no problem with that. But when people are like, hey, should I buy this at 32 or should I wait for that? No, I'm not going to tell you to do any of that. You'll see in my responses and my comments, I'll never tell you to buy or sell any stock at any price ever. Okay, this isn't what this is about. This is about learning how to play the game properly. Once you know how to play the game properly, you won't need to ask me what I think about some certain stock. That's not the point. So me and my daughter were playing top 5 today, like top 5 favorite foods or top 5 favorite whatever. We do that basically to educate each other and just to, just to get to know each other, I guess, on what, we think about certain things. Well, my top 3 things about stocks or investing in general in stocks. Okay, number 1, best in breed. Okay, pick the best stock. Don't invest in Uber, Lyft, and Tesla. Okay, invest in the one that you think is going to win ride sharing. The best in breed there. Okay, so in number 2 would be do your research, do your homework. Learn everything you can about the company. It will give you a ton of confidence when you are investing. And the third thing is learn technical analysis. Learn how the charts work. They're a breakdown of the buying and selling pressure in the market. If you learn these basics, they will help you out huge. I didn't accidentally buy Tesla at 240. There was 4 signals that said buy, 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 buy to me. And that's when we bought. And look at the success of that buy initially. That was huge. And there was more signals going up, more signals, more signals, more signals. All of that came from the technical analysis. So if you do those 3 things, you will succeed in the market. You won't need to ask anybody what they think about some company. You will dominate it. once again, let me apologize. I'm definitely not yelling. One, my audio sucks, so I have to speak up. And two, I'm super passionate, so I just get really wild about this. You know, it's not an emotional thing. I mean, I can talk, I can whisper, but it's so like, I don't know, it's the whole thing. Investing is super exciting. It charges me up all the time. It's not the money really. I mean, the money is like, it's wild sometimes, and it's like the wild swings are crazy, but I've learned to basically not really care about that as much as like the winning. Like I want to win, and it's like I've always wanted to do that, and that kind of drives me, you know, no matter what I've done. So I showed you, you know, track record, my whole family's track record with investing. And I showed you a little bit of the background. I want you to understand where I'm coming from. So you understand, you know, who is this guy? What does he know about things, or what did he do? Okay. So now let's go to like some other track record, not investing. Okay. When I was a kid, and I mean 16 years old, I was about a scratch handicap. I was like a scratch to 2. You know, and I walked on to USF, #1 walk-on of the walk-on people for USF for college. Okay, I ended up diverting and learning how to play billiards. And I became one of the top, I'd say 200, 250. They didn't really have specific rankings to where, you know, most of the time it was like top 50. But if I had to rank it, I actually finished 13th at the US Amateur Tournament nationwide. And I actually qualified 4 years in a row from 1999 in Vegas to 2003. And let's see, what did I do after that? I actually, oh yeah, I learned how to play poker. Within 6 months, I learned how to play poker. Within 2 years, I became the #1 PLO low limit player, which is like under $20 tournaments in the world. This is worldwide. Like 99.97%. So that was my biggest achievement, I would think. And I've won hundreds and hundreds of pot limit Omaha tournaments, no limit hold'em tournaments, high-low tournaments. So that was part of that. And then I got into my own business, and I started that. I actually moved money into that. So I just wanted to give you guys a brief background and brief history of kind of where I'm coming from and what I've done, my track record. Now, I mean, I consider myself the top 1% of all golfers in the world, top 1% of all poker players in the world, top 1% of all billiard players in the world, and I'm going to be one of the top 1% of all investors in the world. That's what I want to do, and maybe not via market cap, but I want to achieve that, you know, as far as maybe in the next 10 years. That's what I plan to do. That's my goal. It's not really a money goal. I mean, yeah, I could set money goals, or hey, I want to have 500,000, a million, or 2 million, or whatever, but the goal is to be the best, period. Money always comes when you're the best at whatever. So money always comes with those things. So, but anyway, I'm going to leave you guys with that. And I appreciate you guys if you stuck around. I didn't mean to yell at you guys, and I was just being passionate. And I hope this gives you an idea of my track record, where I've come from, and, you know, where I want to go. All right. Thanks a lot, guys. And please subscribe and share and like and do anything to help the channel. And I'm going to do anything to help you become better at investing.